And welcome back to the final round here on Yahoo Finance. Miles Udland with you in New York for a little bit more on everything going on in the markets right now. We're joined by Bill Northey. He's a senior director over at U.S. Bank Wealth Management. And Bill, let's just start with what you make of, we're at the halfway point of the year, what you made of we saw in the first 6 months of the year, and how you're now thinking about the balance of this year and from a recession that's clearly going to drag into next year at the very least.
Yeah, thanks, Miles. Glad to be with you here today. And we've really framed this in the context of kind of two investment horizons, and one which we're clearly going through at this point, which we've termed a little bit of a muddle through or a gradual recovery, where we're still dealing with the impacts and the effects of the virus and how it's playing into the economic environment, which is clearly going to be a sharp recession in the second quarter. What the big question is what's that recovery look like as we move through into the third quarter, which it's hard to believe we're already here at this point. A lot of questions around what shape that will be, whether it'll be the V-shaped or the W or the U, many different pieces of conjecture around that, but it's really about depth and duration and to what level can we recover over that next horizon. And then as we move into a point in time where the virus begins to recede and infections start to fall, what does the after effect look like? We've heard it termed the new normal, but what will the current level of, or the future level of activity really look like? Will it be an 80% or a 90% economy? And that's really the big question that's out there, because it has downstream implications for everything from employment to consumer spending to corporate earnings. And that's really what we're here about, is we're investors and we care what happens in the capital markets.
And now, Bill, thinking about, you kind of flagged four major areas, for the investment, your investment framework that you need to focus on. And one that stands out to me is this psychological component of the market right now. And we haven't heard quite as much about it, I should say, in the last few weeks. But the retail bid and the enthusiasm that individuals had around the market, kind of Memorial Day, early June, it seems like people have I don't know, everyone's kind of piled on the train, all at the same time. When you think about the market right now, are you surprised by the resilience that maybe the public has had towards financial markets during what is still a very scary time?
Right. And as we think about the journey from the highs of February 19th to the lows of March 23rd, and then the journey back, which you just referenced, it has been an incredible journey, a roller coaster, if you will. And there has been some degree of a disconnect as we look at current economic data and the way that gets reflected into the capital markets. And so we've termed it this investor psychology, the ability to look beyond 2020 into what the recovery will look like in 2021. We know that corporate earnings are going to be down materially in the current calendar year, and we know that economic activity is materially depressed. And investors have been able to look beyond that into the recovery in 2021 and even 2022. And notably, as we look at the level of corporate earnings, estimates for 2021, so next year, are only looking to get back to the level that we saw in 2018 and 2019. So it really is about this investor psychology and the ability to look beyond the current earnings and economic chasm.
So, Bill, when you take a look at the different data points, when you're trying to identify areas to invest, a lot of times in previous scenarios, you would look to earnings and some of the guidance that we've gotten out. So right now, this is a totally different scenario. So when you're identifying different investment opportunities, what are some of the data points or what are some of the measurements that you're taking into account when you're identifying what is attractive in this type of environment?
Well, certainly at the macro level, the progression of the virus is probably the most important one. And we're seeing a resurgence in that activity at this point. And it's been this tug of war that's existed between the attempts to reopen and now the resurgence in the virus and what that means in terms of suppressing activity, and namely across really populous areas like Texas and California and Arizona and Nevada, Florida. And so as we look at this, from an equity market perspective, or at least from a cross asset class perspective, right now our current positioning is really that which is neutral to our long-term strategic and asset allocation. So neutral fixed income, equity, and real assets. But taking that back a level or down a level, we do favor right now domestic equities over developed international. And even within US equities, we favor large cap or more growth-oriented sectors over the smaller capitalization space in a really scarce growth environment.
And Bill, thinking about the areas you prefer in this market right now, how big of a change is that from the way that you were thinking about things when the year started?
Well, so as we came into 2020, it was a completely different environment. There was concerns about this new spreading virus in China, which seemed to be a small part of the headlines at that point in time. And we were overweight equities at that point in time, and including both the domestic and emerging markets. But quickly as that progressed, we dialed back the risk profile, became much more defensive. And we would consider our current positioning still somewhat defensive, meaning up in quality, both in terms of the equity portfolio and the fixed income portfolio at this point in time, keeping some optionality because we recognize the range of outcomes that exists right now in front of us for the balance of this year until we have a health solution remains incredibly wide.
All right, Bill Northey with U.S. Bank Wealth Management. Thanks for joining the program today. We'll talk to you soon.
Pleasure. Thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.